Okay, good morning, ladies and gentlemen. This is Clueless 8 Trading Frank. This is it's May 26th at around 8:20 a.m. Eastern Standard Time. Wanted to do a quick pre-market webinar broadcast, similar to my pre-market AM reports. And looks like we have a small attendance. I know it's early, and a lot of people are well, getting to work. So I understand that part. This will be recorded and uploaded, excuse me, on the Clueless 8 Trading YouTube channel, which I highly suggest that every single person listening to this or will be listening to it subscribe to immediately. Anytime anything is put out there, you'll be notified directly on the via the YouTube notification system. Okay. Full disclosure: this is purely for financial education and not for any solicitation or advice. So first and foremost, one of the key lessons of life, and trading is nothing but a reflection of how we look at life, to be honest with you, because it is 90% mental, figuratively speaking, is that if something goes by, a life experience goes by, and you learn nothing from it, then it's a complete waste. In that in that type of scenario, you are truly doing yourself a disservice. Every couple of weeks, every couple of months, every couple of days, we are seeing stuff that you never thought you would imagine, both on the upside and every couple of weeks or so, or every couple of months on the downside. And every time we think that it's all over, or most of you think it's all over, the markets basically just power up. And right when you think it's all looking rosy and nice, the market's powered down. It's just the nature of the markets, because it's human nature. Human nature in general, and this is behavioral game theory, so please listen carefully, because if we can master this, okay, and believe me, I try to master it every day. My learning has never stopped from day one. Nobody ever understands the full psychology of the markets. I try as hard as possible, and I think I'm pretty well advanced in understanding the psychology of the markets, because that's really where the money is. So the bottom line is that going back to what I was saying, that if you see a certain cycle in the market, and behind you you're seeing a very simple picture of the S&P 500. If I showed this to a child, let's say 8-year-old child, okay, let's pick the number 8, and say, hey, where do you think these lines are going to go? They're going to join the dots better than every frigging technical analyst on TV, better than every so-called guru and pro trader on StockTwits and other forums, and certainly better than a lot of people who are probably listening to this or will be listening to it later. Okay, so they'll simply take this and I'll say, yeah, why don't you join the dots and show me what's going to happen? They're just going to go like this. They're going to say, okay, looks like it's going to join up here. And a real technical analyst, like all of us included, because we're idiots a lot too, believe me, okay, they're going to say, oh, well, no, it's overbought, this and that, and it's going to pull back, and it looks like, we're going to do a channel retest like this, and then it's probably, if it enters this channel, it's going to come down. We're going to hit 1980 right here, and then we do a possible bounce, and then if we fail that bounce, we're going to come down again, and it looks like it's a downward sloping channel, blah, 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 blah. Right? That's what we do. And if it breaks out, it does the underbelly, retest of the lower channel, and on and on and on. The reality of the thing is, these markets are frigging going higher. And it's a fact. Doesn't matter what your political leanings are, whether you believe the central banks are a complete bunch of crooks out to destroy us, and blah, blah, blah. You've heard every single argument under the world. Because politics and dogma don't make money. They don't. So stay away from it, in the sense that don't try to incorporate that too much in your thinking about stock markets. Stock markets move because there's money going in, and what U.S. Business corporations are doing, and all kinds of stuff, and they don't always move on fundamentals. A lot of it is driven by pure sentiment, which brings me to my next point, which I'm sure everyone knows by now, that almost the bearish readings a week ago on the market were higher than what they were, believe it or not, in certain measures than 2008. That's frigging unbelievable. I mean, people are just true haters of anything that's going on. It doesn't matter that Netflix right now, you say, oh lordy, okay, is at almost a 104, given to my members, okay, on my most recent move down here in the 90 range. It's hitting exactly what I said. Exactly what I said. 104. It's going to go there today. It's at 103.80 pre-market, up almost 3.6%. So it doesn't matter. Like, and these are the simple charts that I'm showing, right? Because they're easy on the eyes and hopefully easy on the brain. So the bottom line is that it doesn't matter what markets do. People are just complete non-believers. So from an emotional aspect, there's enough juice left for this market to at least test, as you can see from this channel drawing, the highs, which is roughly 2134 to 2140. So like I said, if you draw as a child, the child's going to say, yeah, join the dots. It's going right here, because that's exactly what it looks like. This is it's a crossover here, 3450 key indicator, and a move up. And now we are basically getting to a point where we probably will test minimum 2100, if not 2140, test the highs, and we'll see what happens after that. Right? We'll see what happens after that. Because we did a similar, if we want to look at pattern symmetry, and this is important for all of us to keep in mind in the background when we're trading, so we're not getting scared every single 2 minutes because the market's down 60 points, right? Is that we did exactly the same thing last August, September, right here. This was from a lower. That's why it lasted longer, okay? And it's trying to get pretty much at the level. So bottom line is we are getting, on a short-term basis, we are getting overbought. But remember what, what happens? You can stay overbought for weeks in a row, as we did back after we peaked around November. You can stay overbought. And I'm showing you the simple stochastics. You can stay overbought, then you get this sharp dip, then a pull up, and then, all this kind of stuff. Now, is it possible that we do another retest and do the same pattern here? Yes, it is. In my opinion, that is possible, and I believe that's a good possibility in the in the September, October timeframe to retest again and create some sort of really solid triple bottom in the markets for a year-end power rally. Because the uncertainty of the elections will drive the markets lower. That's a given. So that's going to happen about 30 to 60 days prior to the elections, which are in November, as you know. So maybe that's what solidifies the bottom and creates a stage, which then again, the same type of routine. Believe me, it's going to be the same type of routine, okay? In between vicious pullbacks and all that stuff. And then possible breakout, which takes us to the 2300 level. So that's one scenario. So this scenario tells me, scenario one says we are going to be hitting a top shortly, probably by the first week of June. Remember, this needs to get quite overbought, stay overbought a bit before it drops again. This is a daily chart. So it carries more weight. This is not a 1 hour chart, not a 15-minute chart, not a 30-minute chart. This is a daily. Showing it very simply. The consolidation channel, which I kept on showing. I didn't know if the consolidation channel was going to break down or break out. So I kept on walking people through it and working in that framework. But there was a massive positive divergence, which I kept on showing repeatedly. And for some of you who actually understood what I was saying, it's not that hard to understand, actually, seriously, which I explained repeatedly in my video cat, that there was a positive divergence going on, very similar to what happened here, which would say a high probability resolution to the upside. I said it as recently after the Friday drop on Sunday night on the end of the week report. If any of you haven't heard it, you're doing yourself a serious disservice. So go listen to it. So when you get these type of positive divergences, tune off the frigging noise and stop listening to all the massive gurus on StockTwits and other forums that that you should be monitoring, and you go with your gut on what you're seeing on the technicals. So now we have a situation. Let me put this out. Here's this simple line. This simple line would have kept you in trades and made you some serious money. And remember, the fear is been injected through your amygdala. And I'm not going to tell you what that means. Google it, learn it, and print that word, okay? The fear and the nervousness has been injected in your amygdala due to the volatility in the market to a level where it cannot be extracted for a while. What does that mean? Simple English, okay? 4th grade English. The scars of these big volatile markets, okay? Even on the move up, volatility, and trades not held, money's not made, money's lost, has left such a scar and nervousness. It's like a battle scar so deep within your amygdala that regardless of these type of extremely transparent, distinctive patterns, the majority of traders and investors are failing to make money. This is not just happening here. It's happening across the board. It's happening in the hallowed halls of some of the biggest hedge funds who are still underwater for the year. The markets are barely up for the year. Think about that for a minute. So when you hear the uber bears and the dogmatic bears tell you that, oh my God, we're completely, overbought, this is crazy, it's euphoria, it's all hogwash. I'm a cautious bull, but I'll tell you, you hear this type of dogmatic bear talk, you want to throw up, because these idiots know exactly what they're talking about. Not that they don't know what they're talking about. They're short and they want the market to pull back every week so that they can make money. And they are screaming in pain when the markets are within defined patterns moving higher. So saying all that, this consolidation channel has now been broken out. So it looks likely, simple, that we are at least going to test the 2100 plus level. And I think that given the internals, what they're showing, this needs to get into this overbought 80 to 90 territory, well, 90 RSI type of move. You're going to see an overshoot, which will bring us up to maybe 2120, possibly 2140, which was 2134 on the S&P 500, was the May 20th or May 21st highs, all-time highs on the S&P 500. So is it possible that an all-time high be tested within the next 2 weeks or so? Yes, it's very possible. Now, simple common sense says that once you get overbought, you're gonna get a pullback. So the pullback of these levels, you can do it yourself, are going to be to test the bottom end of this channel that I've drawn. You can draw this channel too. See how defined it is? And that bottom end of the channel again is that 2060 level. You're going to hear the bear, the hardcore, oh, it's over. Now, who knows? Maybe we'll pull back and not be able to hold and then fall into the 2000 range. Everything is possible. All scenarios are possible. Which brings me to a very important point which everyone has to understand. These are extremely, extremely news-driven, turn on a dime, machine-driven markets. So don't sit there complacent thinking that, oh yeah, this thing's going higher, the technicals look great, and it's all going to be fine. It's not going to be like that. This is a very selective market where hedge funds are day trading. Remember that very well. I mean, remember that and write it in your brain. Hedge funds are day trading. You are day trading against machines that are being run by hedge funds. And we're still beating it. So go figure that. I'm talking about clueless day trading. Overall, my forecast, my guidance on particular selective stocks on the overall market has beaten the pants out of anyone out there. If you don't believe it, go look at it. So what you're doing is it's hedge fund trading. You're day trading hedge funds against the machines. So that's the reason, simple reason, one of the reasons why you see such heavy volatility on individual stocks. Okay, they're day trading. And so don't be sitting there thinking, oh, well, this is going higher. It looks like it. You got to be flexible. You got to be adaptive. You got to take your profits. Yes, you might leave a bunch on the table. Well, what to do? Some of it is risk money. This is not a riskless game. There are traders who come into the business thinking this is low risk thing. I'm going to buy this. It's going to go higher. No, this is a high risk game. And therein lies the reward. So what I do is I do a framework. I put a framework in there so you guys can quantify your risk. This doesn't mean you're not going to get a blowout like Paragon Shipping, which is down 44% right now, 70 cents at 90 cents. Well, that's a spec play. It's a dollar play. So if anybody lumped in too much in that and got hit hard, I'm sorry to say, it's their fault. That's a spec play. You can see that. Yes, even though it's going to get be trading on the OTC, a bulletin board now from June 5th, I believe. This thing, Paragon Shipping, this thing could rise from the ashes. But I don't particularly care because I own it. I'm down on it, but I don't have a big chunk in it. So people who did, because it's a $1 play, oh, it's going to go to 20 bucks. We're all going to be, and it's happened. Well, take personal responsibility. Move on. All right. Dump it, sell it, hold it, do whatever you need to do. So those type of black swan events, you can determine. You can determine. So same thing with biotechs. Okay. Big blowouts, big moves. There are systematic patterns in many of the biotech stocks on the IBB and such. But individual biotech stocks, there is always that element of a blow up, a blowout, or a blow up, big move up. Techs generally don't tend to do that much because it's not like Apple all of a sudden gets an FDA non-approval for their iPhone 7, right? So it's not what you see in Apple is a bunch of bears says it's the complete the company has no growth, nothing. They slam it down to 80 some bucks, $89. I look at it. The charts look fantastic. They don't look fantastic. The charts look on a contrarian basis fantastic. Issue buy signals and the stock's hitting 100. I didn't hear too many people say buy Apple at those levels. So skimming through, and this is the simple chart platform showing you today, okay? Skimming through, it's not about the charts. It's about you. I say that to myself every single day. It's about me. I am not performing to peak potential. I am not. And some of you that I know, you guys are not even close to peak potential. You don't even understand what you're doing wrong. And that is terrible. What you're doing wrong is you're being scared all the time. That's what you're doing wrong. You don't need a therapist to tell you that. What you're doing wrong is you are not putting in the focus, the time, the energy to understand the dynamics and then executing that trade. This is executing the trade is not buying. It's not hitting the buy button. It's telling yourself you can do it. That's called executing the trade. And many of you are not doing that. You're just going along every day thinking, oh, well, it's a great day. Well, how about putting in the real secret ingredient, which is focus, determination, persistence, and hard work, so that your preparation yields results. And I'm not seeing that in too many people. So good luck to you all, because I'm not your, grandma, and I'm not your mom and dad. So do what you need to do. But I'm trying to be helpful. That's why I'm saying these things. So I tell myself I'm far from peak potential. I am. Because if I executed from A to Z on the stuff that I show, I could make $1 million a month. And remember, the type of volatility that we, and that's a figure of speech, by the way, but still, the type of volatility that we see in the market, up and down, within this structured framework, that's where you generate those 200, 300, 400% type of returns on the calls. In some cases more. On the options, which are really the high beta movers, and in individual stocks too. Individual stocks, you're not going to get $1 million a month, okay? Unless you're playing really big on the number of shares you're trading. But the point is, you can mix them up. That's the way to do it. Now, the bottom line is that why am I not work at peak potential? I'm saying this to myself, is because this uber volatile market, regardless of anything, regardless of my management and regardless of my charting, which is extremely precise, and all the readings and stuff, it's still a scary place. And this is what brings me to one of my final statements, is the machines will always keep you on your toes. Always keep you on your toes. The machines are vicious on the upside for shorts, and they're vicious on the downside for longs. But once you get pivotal points in the market, whether it be on the upside, up here, okay, you can see how defined this pattern is. Draw one more line right there. Got to start looking, focus like a hunter. You got to focus. Right there, we had a big supply point. We had a big resistance. This is where a lot of selling occurred. So you put a dot there. Is it possible that we stall here a bit? Absolutely. So if you want to do a pattern symmetry, it went like this, right? Then the big move. Here it didn't wait around. It just gapped open and ran. Lovely. So now, if you want to look at it as a let's say pattern symmetry, then it's going to be, I'm going to do it from the other side. We are going to hit that to, the 2100 plus, but first it might do this. In other words, it might pull back a little bit. And I think that's healthier. But this is not about health. This is about decimating some massive amounts of shorts who keep on shorting the market and burning at the stake at this point. So is it possible that it just overshoots right away? Absolutely. So that the risk is, believe it or not, to the upside. In other words, us not being in there when it's moving higher, at least from now till the first week of June. The risk is not necessarily to the downside. Once we get up here, in my opinion, that's when the risk is to the downside. In other words, a risk is to the risk is to the downside, in the sense that it's possible that we get some sort of pullback. But around here, a logical thing, and logic doesn't dictate markets, as we know, it would be nice to see one like down like that, create that, confuse the heck out of every trader again, and then move higher. Who knows? We are overbought. Follow, every stochastic on different platforms look a little bit different. This looks different than what the ones I track on the quad algo HFT platform. which those very mathematical looking charts. You guys know, some of you are newer, and we have had some great new people who have joined, had an opportunity to speak to them yesterday, and really thrilled to have you guys on board. Those ones are very precise, and those are also showing some pretty nice overbought levels, both on the slow and the fast stochastics, which tell me that we are going to come in for a little soft landing. So key things to take away is the fact that we have to learn every day. This is not kindergarten stuff, okay? I mean, this is not the pre-K. So if you really want to thrive in this business, then try to learn something for every experience that you have. If you don't have that experience, if you didn't participate in something, learn from it anyway. But don't keep on doing the same thing over and over again, meaning either sitting aside or buying in a frenzy, in excitement, and then getting slammed. Don't keep on doing the same things. In the meantime, I think the worst and biggest danger from a behavioral standpoint on what we're going through with the markets is because the algos and the HFTs have made your brain mush. And it really, makes us think like idiots. We get excited with prices moving. What's so exciting about a price movement? I mean, yeah, what's exciting about a price moving is when you're in it, because it gives you the opportunity to sell, just sell at will. Buy at will is down here, right? Buy at will is around these levels. Just buy. Everyone's just getting out. Prices just falling. It's coming to you. Very few do. Very few of you do too. You know that, I need to tell you. So anyway, and now it's basically sell at will. Sell at will. SAW. So if you did the hard work, paid the price of sacrifice, determination, focus, charts, everything down here, you have absolutely no reason, honestly speaking, to even bother trading at these levels because you have some significant amount of profit that you've generated in this particular move up. So don't push trades aggressively on when the market is on a slight tradable top, because you're just going to give back everything. Doesn't mean the markets can move higher. I keep on saying, don't aggressively short either, because there's a lot of juice left in the market for another short squeeze. I believe futures are up right now. God, some news came out on Netflix, obviously. It didn't matter the news, that showed it on the chart. Stock is up $4.50 right now. So the key thing is just try to learn something. I do enough. I can't do any more. I will, every single person who's listening to this should be. And if you're not, you're doing yourself this favor, not me. Should be in the advanced coaching sessions. For newer members who have joined recently, I'm doing one on Saturday morning. I have a busy weekend coming up. Lots of, not necessarily fun stuff, but a lot of, stuff that I have to take care of. And I'm still going to do that, so I can basically give them the navigational tools on a first-hand basis via the webinar on how to navigate the site. And they will certainly be hugely helpful to them. But all of you should sign up for the advanced coaching session, because if you don't get into the real nitty-gritty, the details, everything that I cover in a heavy-duty way, doesn't matter what I put out there, you'll still make major mistakes. Guaranteed. Because self-sufficiency, and you're driving your own car. But if I give you a detailed roadmap and you don't know how to drive that car, you're going to be up that tree. So do it. And it's not like it's even costing you anything, because it's very little money. You know that. Okay. So really, here are the two major charts that are dominating the markets. The Dow Jones for mom and pop to look at. Oh, it's exciting, Dow Jones. Well, here's the Dow Jones right here. Okay. There it is. In midair. Dow Jones can easily go to 18,000. I think we hit 18,000 by Memorial Day weekend. I have always said, and people have listened, listen, do not try to short Memorial Day weekend. Just don't do that. And that's exactly what's going on. All right. Then you have the SPYs, which I've shown. This is a short-term picture. This is the daily picture. You see what's going on. Still have more room to move. We might pull back and retest the 34 and the 50. Drop about 100 points or so. That type of stuff. 100 and 50 points. Don't freak out till you start to see a real break below the 34 and the 50 and these lines turning down. I've explained all this stuff in basic terms. IWM. This is fantastic. US small cap outperforming the S&P on a short-term basis. Why? Because they're the ones who are most slammed down. Regardless of what you hear, whatever your political ideology is and stuff, the US economy is doing better. Is doing better. It doesn't mean everyone's going to be rich and happy. In order to be rich and happy, you got to work smart. The old line industries are dead. They ain't coming back. It's terrible, but that's the way it is. If old line industries are not coming back, it doesn't matter what politician says what. This is a day and age where you have to retrain yourself, just the way you have to retrain yourself as a modern trader, understanding the machines, understanding algo high-frequency trading patterns and stuff like that, instead of the same old-fashioned trader sitting there going, oh, well, if it crosses over the 100-day moving average and if there's volume in it, looks higher. Garbage. This is a new world. Welcome to the new normal. So it's the same thing with the U.S. industry, the U.S. society. It's a new world. There's always, during a time of massive transition, when we moved from back in the 1800s, when the U.S. moved from agricultural farming-based industry into the 1900s, in the modern industrial age, there was massive displacement of people. Ghost towns appeared. Same thing happens. Technology is changing things. It's not good and bad. It's just a fact. We got to live with it. So how do you survive that? You retrain yourself. You get your kids to study professions which are the modern professions, not the same old garbage in some fancy college. Tell them to work their butts out, or else they're going to be just like any one of those people out there sitting there screaming at everyone else, blaming everyone else for their ills, when you can change your own life. So same thing with trading. Adapt to the new world. So here's the U.S. economy here. All right. And the U.S., what the bottom line is that small cap, which incorporates a much larger subset of companies, obviously, the Russell 2000, IWM, RUT, for example, it's a breakout. So now it's going to hit the uptrend, the downtrend line, this one, which should be in red. Not the first time I'm showing this. Showing in very simple terms, and it looks like it will test that 115 level. Where are we right now? We are right here. So it's not much out there. It's getting overbought on the 4-hour. Let's see what it's doing on the daily. On the daily, this would be the proper way of drawing it. And start drawing your own charts, to be honest with you, and try to mimic some of the things I do. Everyone has their own style, because chart construction is like art. Everyone's got their own style, okay? So you got to go with it. So at this point, look how perfect it is. Exactly what I'd shown. We hit the downtrend line. But it shows here that we're moving higher. It hasn't topped yet. So by the time it tops, it could be as high as 115.50. Who knows? Does it get to 120? I don't know, but this thing moves. And it's coming off some pretty low levels. Look where we were. 130 down to 93. So this is playing catch up. And it doesn't always have to be what the U.S. economy is doing. It's playing catch up because there are biotechs in there. This at a good amount of oil. Companies are, small oil companies are within the Russell 2000 and the Wilshire 5000, two of the largest indexes out there, indices out there. So they're picking up. Oil hit 50 today. 50. I showed that. Oil's going to go to 52. Showed that chart yesterday. Last thing I'll tell you, because I can continue going on and on. Very, very important. Critical. Keep on repeating. You have to study what I put out there. I don't care how busy you are. It takes 10 seconds to look at something. So if you want to make yourself a whole bunch of excuses, then write it down, put it in front of you, and you will never make money in this market or any market. But yeah, you get lucky once in a while. Everyone does. But I'm talking about basic consistency. Saying all that, it's still difficult. So you got to study what I put out there, scan the headlines that I put out there, because those things will give you the fodder you need, the mental fodder to be a little bit smarter than the average Joe out there screaming on StockTwits or any other forum about stocks. Everybody's a frigging analyst, so don't be one, because you'll never make it there. Because analysts are not even correct 90% of the time. Yet they analyze, right? So stay away from the analysis paralysis part, please, and stick to your day job. And the final thing is you have to take risk. There always has to be risk capital. I keep on telling myself, which you are willing to lose. Only then will you make money. And it's a fact. And I'm not saying take your whole thing and say, okay, risk money. But there has to be a certain amount of money in certain trades where you say, you know what, if it doesn't go, fine. If it goes, I win. And I'm willing to, so you got to take the risk. Don't take the risk. Don't listen to me. Don't do this. Just sit there and buy a 10-year bond at 1.85% and just say, okay, see you later. But every single chart, especially these type of charts here, okay, that I have shown, I mean, these are constructed to almost perfection before these things happen. So if you want to understand really about every single move and this and that, these patterns, then sign up for the advanced coaching sessions. I'll walk people through it. Because one thing crappy about socialism is when you get everything for free, like we're getting all this stuff for free, by the way, okay? You get spoiled. So spend a little money, put a little skin in the game, and I'll devote my time to helping you all. Have a great morning. It's going to be another heck of a day. And looks like our earnings plays are doing fantastic. Almost all of them. Nice. And God bless you all. And God bless the USA. Thank you for listening.